All right, folks. Now we're going to discuss the alignment of the weekly, the monthly to the weekly, right? And to look at the monthly bias and the monthly profile, to trade the monthly profile, you look at the 1 day or the 4 hour, right? So to trade the monthly profile, right, you look at the daily and the 4 hour. The summary of trading profiles is like this, right? You have an opening time, you have a closing time, and you have whatever happens in between, right? If you're bullish, then in summary, right, to make it real simple, because if you can't explain something simply, then you don't understand it, right? So to really simplify it is you're looking for price to come open, right? Perhaps an accumulation, week 1, manipulation into a key level and distribution, right? In 2 legs, right? So key level over here, key level over here to cap the range. Of course, that never happens. It's going to go here. It's going to bump back down to cap the range, right? So here's a key level. And over there is a key level. And I'm going to post this picture to the group, right? This is the summary, right? Now apply this on the monthly, weekly, daily, even 4 hour, right? Even the 1 hour, even lower. But this is the summary of it all. You got this, you got key level being hit at a certain time, and then distribution, accumulation, manipulation, distribution, accumulation, manipulation, distribution, right? Now, applying this to the dollar, which we had seen, we have here the key level, which is the previous month's low into a monthly FVG, right? So before the month even opens, we're going to mark the key levels, right? Just like that. And it looks nice in hindsight, but this is all called real time, right? Have we hit a key level? No. No trade, no entry. A side note, I'm going to allow myself to be sidetracked for a bit, is why didn't this OTE work? That is a question which I'll answer in a future video, right? Why did this OTE not work? Accumulation, manipulation of the body, distribution, kind of an iffy, because there's no really, the low wasn't taken out, and if the low isn't taken out, you don't really consider it as a manipulation. However, you could classify this as an OTE, and many Twitter traders were tricked by this OTE as well, right? So why did this OTE fail? And the answer lies in the intermediate term low, which is this right here. All right? I will leave that for your homework, right? For now, let's focus on the topic, which is monthly opens, accumulation, manipulation, distribution, hitting a key level, right? Let's go here. Now, the key level hasn't been hit, all right? This is where you expect a bottom to form, blending in the monthly bias with the weekly bias with accumulation, manipulation, and distribution, which is expected to occur after this, right? Now, when do we turn bullish? If you watch the previous video, we turn bullish as soon as we reclaim the low. So as soon as this happens, we're now bullish. Stop loss, target, right? And to find an entry, you're going to use this candle, the FEG, and the order block, right? You got FEG. Order block, this specific candle. The change in the state of delivery happens as soon as you close below candle, right? Close below candle equals change in state of delivery, right? Or above for bullish, below for bearish, right? So this was the first entry from the formation of the bottom. So the bottom forms at a certain time, and after that it's buys only, right? The last important point I'm gonna touch on today, after we continue the price leg, right? You got this. Now, remember what I said about, let's say you reached here in price, and we did reach here, right? Why do you expect the price will continue higher? Because we're respecting a monthly PD array, and when respecting monthly PD arrays, then it is healthy to expect that the daily PD arrays will be broken through and used as support, right? It would be concerning if we had closed below this candle, but notice how we never ever closed below an up close candle during this entire run, and we won't even up here, right? So have we closed? No, still bullish, right? And indeed it was bullish, right? So the closes that happen above and below candles are keys. Close above, bullish. Close above, bullish. Close below, nope, bullish. Close above and retest, bullish, right? So we never really closed, not once, below an up close candle, and if we did, it was to grab some liquidity and keep going higher, right? Because as we know, in a bullish market, bearish candles are engulfed and followed by bullish ones, right? And it was a beautiful price swing. It was the price swing of the year, in fact, which we got, and that concludes the monthly to weekly to daily teaching. I said monthly to daily, monthly to weekly, but it's monthly, weekly, and to see the monthly profile properly, you got to go to the daily chart, right? So in summary, because that was a lot of words, right? The important takeaways out of all that are: 1, how to study, if you already know this; how to frame a bias; 3 is how to probe order flow and milk the bias, right? Now, I don't want to go too heavy for the first day, so that is all for now. All right. There were some extremely important points mentioned, such as what you consider during an upswing, right? I will mention something right now, which is number one. How to trade a profile, right? How do you trade a profile of a candle? How do you probe order flow during the price swing? The importance of closes. Versus not closing. In a bullish market, bearish candles or bearish engulfing candles are followed by bullish ones, right? An important thing to note, right? Because I know there's some advanced students inside here. And to them, I will give you this reminder, which is me, for example. If I can take away one thing which I can implement into my trading, right, then I'm satisfied with what I'm watching, right? So have that same mindset. Obviously, this is a more advanced class, so a lot of the things I'm saying are repetition, and repetition is good for the brain. There's a saying which says, repetition teaches the donkey, but that is not appropriate for this setting. But it's true, right? Even if you're stupid, which I'm sure a lot of you are not, then repetition is always a good way to sharpen your blade, right? Practice makes perfect. That saying wasn't invented for no reason, right? So whatever things you already know are being repeated, good for you. There you go. More practice for you. And I've mentioned a few important things, which is the failed OTE and the concept of reclaiming highs and lows, right? Those are for your study. Only to the advanced students, right? Because if you're not at the advanced level, then you are better off studying the basic PD arrays and then moving on to those. So failed OTEs and reclaimed highs and lows, right? That concludes today's teaching, and see you all in the next one. And good luck and good trading, and see ya.